Are you bullish on 2023 for crypto? Do you think we're going to have a return of the bull market, or are we very, very bearish heading into 2023? So, right now we're still in a bearish market. Entering next year, we got to be in a bearish market, risk off. So this is where investors kind of differ, especially value investors, deep value investors. You have a camp that believes in looking at the macro to determine whether you should invest or whether the market is going to be good. Then you have one camp that doesn't look at the macro. And for me, I would say I'm more in the camp of not looking at macro, honestly. The people I really respect the most in terms of value investing, Howard Marks, does not look at macro at all. If you're purely looking at macro to invest, you could miss golden opportunities. For example, you could miss Solana down 95%. You could miss Polygon last market cycle because we're in a bear market. Because you want to be more of a sniper. If you're sniping, the market does not care. You're looking for an opportunity. You can find opportunities in bull markets and bear markets if you know where to look. If you have the stance that we're in a bear market, we can't make money, you miss any chance to make money in a bear market. Right? So let's say, for example, Ethereum has bottomed, but we're still in a bearish market. Maybe now's the time to accumulate ETH. And then let's say Solar Network has bottomed, and now this is the next big coin for the next cycle when the multi-chain narrative becomes big and Stellar becomes one of those coins that bridges all these chains and these dApps. But let's say you missed that because you were not looking, because you're on the sidelines in stablecoins or in cash. So that's why I don't really like to look at the macro, because the macro can blind you. The macro is basically you're trading, you're following the big narratives for the economy. But if you're looking for a particular small niche or sector where there's a bull run, you'll miss that if you're looking purely at macro. Now, I did share this tweet in our private alerts channel, and then I'll kind of give my response to how I viewed the market. He goes something like this. Over the past year, you might have seen a lot of chatter on crypto Twitter timeline about US interest rates, inflation, and CPI, and thought, what does this mean for my bags? But you were too afraid to ask. No worries. Here's an Eli 5 on how US monetary policy drove this cycle. The US is a large player in crypto. Lots of the market is in the US. And basically, the US was printing a lot of money. The USD supply, the money supply, grew 26%. People had to start chasing turns because inflation was going up. A steep rise in inflation in 2021. The narrative is, my cash is losing value because of inflation. I need to buy assets that are appreciating in value faster than inflation is rising. And he basically shared this chart on DeFi Llama showing the yield for DeFi versus US inflation. Demand pumped token prices, which pumped DeFi yield, which attracted capital to DeFi protocols to capitalize on that yield. Right? Monetary expansion and inflation played a big role in launching the DeFi bull market. But good times don't last forever. High interest rates also lead to higher treasury yields. So investors move money from other assets into treasuries. The trade-off basically began in April 2022, where the median DeFi yield fell below the yield of one-year US Treasury bills. So at this point, sophisticated investors who were farming DeFi yields and had access to US Treasuries were faced with a big decision, right, to either reallocate capital or miss out on gains. They're basically arbitraging the yield between crypto, DeFi, and US Treasuries. But once the yields decreased, the bull run kind of stopped. Pretty insightful thread, kind of gives you a very high-level overview on what happened. Basically, money supply QE, quantitative easing, happened. That money caused inflation. People had to beat inflation. They had to find riskier investments that had better returns and chase the yield. That's kind of one narrative in terms of how the macro happens. But why I say that the macro does not matter. Our goal is to find alpha, to find value, and you can find that independent of the macro. I don't need QE to help me make a return in crypto. If you're looking purely at the macro, you'll miss out on the money-making opportunities. That's why, for me, I just look for value investing, deep value investing, because something is valued at a particular FDV or price, and you get it at a steep discount, and you know eventually it's going to go back to that price or do a 10x from that price. Why does the macro matter? It only matters if you're trying to time the entry, but timing the entry is a fruitless game because, one, it's very hard to do. Your goal is to get approximately close to the entry and to just accumulate. That's the way I like to play that. So are we bullish for 2023? I would say yes, because if we're looking at all these different prices, all these different crypto assets, they have been getting killed. Lots of altcoins are down 90, 95%, if not even more from all-time high. This is how I play this, irrespective of the market or the macro. Good fundamentals, good technology, good value. All three over 80, definitely worth keeping on a watch list. And at this point, you're basically just waiting to see whether you want to get in now or whether you want to accumulate over time. But this is the definition of deep value investing. And then you can look for additional points of confluence and look for narratives as well, because narratives do play a big factor in crypto. So why this to me is very attractive is, besides all these grades being good, the narrative of a multi-chain world. The future of crypto is multi-chain, right? So basically we basically have Ethereum, but we're basically going to app chains, I believe, and a multi-chain world, right? So we have L2s. When it comes to L2s, we have Arbitrum, Polygon, Optimism. That's one aspect. Then we have non-EVM, or maybe EVM/non-EVM competitors for a multi-chain world. So we have Cosmos, we have Polkadot, we have Layer Zero, we have Celestia. Multi-chain is the big narrative for next cycle. How do we build a portfolio that gets exposure to that? So you have the L0, the base layer exposure. You could have the L1 exposure. You could have the L2 exposure. You could also have the infrastructure, Web3 exposure. All those, I think, are ways you could play the market. Quick recap, bearish heading into Q1, but bullish on crypto, bullish and being able to snipe and find ways to still make money in a bearish market. So I think we can still do well next cycle. We snipe, we find those good investments, those good trades using tokenomics, and we also preserve our capital. We find what assets are not worth holding. Surprisingly, you're better off holding Tron and Monero, surprisingly, versus Bitcoin, versus Ethereum. So had you known that, your portfolio might not be as wrecked. Or maybe you just leverage our signals, right? If you're trading this, if you just leverage our signals to, for example, get out back in April on seller, and then wait for this to dip. But that's how I'll be playing the market, right? So long story short, I am still bullish for 2023.